Okay, let me also go across to Mubina now. We're watching out for, what is the latest on Hindalco and what are some of the takeaways from that analyst meet. They've also turned quite generous on the dividend front. Mubina?
Well, expect a more generous dividend from Hindalco. That's what they've announced at their investor meeting, which was held virtually. It was not just about dividend, but how the company will grow going forward as well, what sort of capital expenditure that they will be, incurring, and on what kind of projects. So largely, they have estimated an average annual free cash flow of $1.2 billion over the next 5 years and a capex spend of $2.5 to $3 billion over the same period. So let's understand how are they going to be spending this cash flow. So it's about 50% of it that's going to be utilized towards growth projects, 30% on debt reduction, and 8 to 10% will be utilized for dividends. This is definitely larger compared to the current policy where they were paying out 10 to 30% of the standalone net profits. As per Macquarie, this would give a boost to dividends by 2.5 to 3 times in the hands of the shareholder. On capital expenditure, it's going to be concentrated on downstream projects. So a little over $1 billion towards downstream capacities and $1 billion for a Novelis expansion project, which includes an all-important $300 million China project, which is important for the Aleris synergies really to kick in. Now, Macquarie has maintained their outperform stance with the target at 352 rupees, as they as well note that the capex and the growth projects are centered around the the downstream facilities, which will be ROE accretive. Though mind you, the management has not given any guidance on that front, and they have said that there is structural domestic growth potential, and that they will also be leveraging Novelis's capacity. So essentially, Hindalco is focusing in on where does India's growth potential lie and targeting that.